Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Bed Bath and Beyond. And after this 30% upwards move, 32% upwards move on Friday, I got excited. I really want to talk about it today. And I'm going to be going through a couple things: social media sentiment and some options data, just talking about sort of where we're at and giving a little of my thoughts. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not currently hold any position in Bed Bath and Beyond, although in full transparency, I am likely to open a position this week, um, depending on how things unfold. So this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So, Bed Bath and Beyond. I've done a couple of videos talking about how there's a lot of aspects to this stock and to this company that are similar to how GameStop was before it had its massive run up in January of 2021. And I think Friday was the first indication I saw that that's really that this could actually turn into the same situation, right? Because in my opinion, um, you know, well, let's address one thing real quick. Is this the start of a short squeeze, right? Because there's a lot of stuff going on social media right now, and I'm going to give a little bit of opinions on that. But is this the start of a short squeeze? We can't know for sure, but my best answer to that, I'm personally fairly confident that this is not yet a short squeeze of any sort, right? And just to sort of recap, or to remind you, a short squeeze would be when somebody who is short the stock is forced to close out their position. And if you look at the pricing of the stock, before Friday, and even if you look at this, most of the volume was at the very beginning hours on Friday. You can see here it was, by 10 o'clock, the stock had already reached, 790, which is basically where it was going to be for the day. It moved up a little bit longer, but that was, or a little bit much, but that was already 90% of the move. And that was almost all the volume. And this seemed to just happen right out of the gate. And it's obviously unclear why that happened, whether it was somebody taking a position or what. It certainly hasn't been publicly disclosed if that was the case. But if you just look at this and if you zoom out a little bit, because right now I'm only looking at five trading days, which is last week. But if you zoom out, a lot of the short interest in the stock, a lot of the shares that were short, have been opened sometime that was not in the past month or two. I have to assume, and I'll go up to the graph of that in a little bit. But if you look at, there's all this time period during which all of these short positions were opened, and those short positions are not going to be, they're going to still be profitable if they're still open. And even short positions that were opened in the past couple months or two, it seems unlikely that those, just the run up to $8 would have been so large that that position sort of caused them to have to close it. Some folks may have proactively closed it just because they saw it going up and they said, I don't really want to deal with the potential that this could go even further. But I don't think anybody got squeezed in the sense that they were forced to sell these shares. Now, I talked about some of the short positions and the short interest, and we do have data that gets reported on a very, very delayed basis of how many shares are short. And so I've been saving this data. I don't know of a good source to see historical numbers here. So I just sort of jot it down every 2 weeks or so when this data comes out. And this is showing the Bed Bath and Beyond shares that are short over time, starting from the first data point that I had written down, which was the end of January of 2022, and I have data for mid month and end of month. This is what gets reported, and you can see that the short interest had been going down into about the April timeframe, and then it's been going up ever so slightly since then, but steadily, and now is close to its highs in terms of the amount of shares that are shorted. And there are currently, you can see here 28, maybe that's too small, but 28.5 million shares that were shorted in the middle of July. And if I sort of look at the first derivative there, and I look at what is the change in shares short from each one of those reported data points, you can see there was actually quite a large increase in the shares short, almost by 7 million shares, just eyeballing it here, between the end of June and the middle of July. And so it'll be super interesting when we do get the next reported data for this, which will probably come out, I think, next week. And that would give us the data through the end of July. And so that will be super, super interesting. It is very frustrating as an individual investor to not have this data in real time. And who knows if there is a good source for this that institutions have, but this is data that we as retail investors have to work with. But this is getting back to my point that, yes, there was some short positions that were opened in the beginning of June. And so that would be, at the $5 range. But even at, if we're going back and we're looking at this, the Friday data, very quickly, this is at $7. The first hour was $7 and sort of ramped up to $8 there. It's a little hard for me to believe that any particular short position was actually getting squeezed at that point, just because this is not such a huge run up. Again, they may have proactively closed it out because it went against the direction they thought it was going to go, and they didn't want to hold it anymore. But I don't think anybody is being. It seems to me that it's unlikely anybody's getting squeezed at this point in time. Now, that being said, one of the aspects, I still think there's probably significant short interest still open at this point. And, I've talked about this in a couple of videos, as I mentioned, but the one aspect so far that has been missing with Bed Bath & Beyond that GameStop had was the significant social media interest, right? The significant amount of retail investors who were interested in the stock, who were buying up shares, buying, call options, and that was evidenced by all of the posts on Reddit and other social media. And that part I have not actually seen, right? I was one of the folks who were a little bit involved in invested in GameStop during January and beyond in 2021. And I've spent even more time sort of going back before that, before I had ever actually bought into GameStop and looked at some of the data on social media. And that is really where we can see a huge amount of, close my tab to save memory. But you can see this is the subreddit stats for the GME, the GameStop subreddit. And you can see that just exploded in January of 2021. And even if we zoom in here and we look at, November, let's see if I can get this here. You can see that there was not that many members, and then it was steadily growing, right? You can't really see it here because of the later exponential growth that the subreddit had, but you can see that this thing went, it was small in November, 50 or so people, 40 people as it really started, and then it grew into hundreds, and then it grew into about 1,000, and then it just went crazy in January. And, if you were around and you were reading this or reading, Wall Street Bets around the time, you saw GameStop posted all over the place. And even, I was not invested in GameStop until, late January, let's say, sometime in there. I put in just a tiny bit of money personally, but as somebody who sort of casually read Wall Street Bets for some entertainment, even in November, December, GameStop was one of the stocks that I saw post about quite a lot. And you recently haven't seen it with Bed Bath & Beyond, except recently it did trip over. I think there's a minimum market cap rule, at least now there is, for what can be discussed on Wall Street Bets. And I mean, if you've been reading it in the past couple of days, there has been a lot of talk. And, it starts to feel a little, this is not quite scientific, not really data, but it does start to feel like the early days of the GameStop situation really were. And there is some data around this, right? And I've pulled this chart up before. This is the Bed Bath & Beyond stock subreddit. And you can see this has really been growing. Just to compare this with the GME, the GameStop subreddit chart that I showed you, you can see this one's starting to go up quite a bit. And, you look, let's see, about a month ago, there were about 10,000 members. As of today, there's 14, maybe 15. I don't know if this has the data currently as it is. And it's sort of going pretty steep up from here, and so we'll have to see where that goes. And then if you look at this is a website, Memberg Terminal, that I found that has some statistics on how frequently each stock is mentioned on across Reddit, and then also we'll look at Wall Street Bets if it has the data here. But you can see Bed Bath and Beyond at the moment is a top, trending stock. It's changed, it has like a almost a doubling of mentions in the past 24 hours, it says. And you can see this all started, this is today is day 7, 2 days ago is day 5, which is on Friday, and you can see just that massive jump up in mentions. That's probably due to Wall Street Bets. And let's see if it gives me the actual data for Wall Street Bets here. Yeah, so there you go, and you can see right there, after Friday, there's just tons more, and this is super interesting. And it's starting, as I said, it's sort of starting to feel, as somebody who just casually reads it, that this is actually gaining momentum and that folks are interested, right? And it has some of the same aspects that folks who were around and happen to be involved in the GameStop situation are seeing with Bed Bath Beyond, right? It's a retailer that has some debt, but and a lot of folks think it's going to go bankrupt in the short to medium term, but it's certainly not a given. And there's some bull thesis, right? For GameStop, it was all the new consoles being issued, and that was going to bring in a lot of short-term sales and let the company live much longer than what the sort of the stock price showed. For Bed Bath and Beyond, the main thesis here is the bye baby asset, those stores, and that those could be leveraged somehow to help Bed Bath and Beyond either spin that off, which would be a boon to investors, or sell it, or whatever, do something that's going to let the company live on, or at least give return to the shareholders, more than what the current market cap of those shares reflects. And you also can't overlook the involvement of Ryan Cohen in both companies. I think that's that really gets a lot of folks' attention. And so I think this has been one of the aspects that, to me, I've been super hesitant about, because I haven't seen in this particular stock in Bed and Bath and Beyond, but I actually started to see it on Friday, where social media interest is picking up, and I think it now has sort of a lot of the pieces are falling into place to where this could be another GameStop style, GameStop style short squeeze, game of squeeze, whatever you want to call it, that might happen. Now, I did want to jump over and look at some more data that we can get from Bed and Bath Beyond options. And so I pulled the options data from CBOE. This is the the exchange where a lot of options get routed through, I think. And but I think that the data from all the exchanges sort of aggregated, and I got all this data and did some crunching of numbers, put together some stuff in the spreadsheet here, and I looked at a couple of different things. The first one I looked at was the open interest for the both calls and puts, and then let me see if I can zoom this in here. It'll be a little bit easier for you to see. Maybe that's better, hopefully. So this chart put together shows on every date, and I started as with last Friday, and this is going further on. What is the open interest, just the total open interest, right? So it's a very gross metric, or coarse metric, I should say. But it gives you some indication of how many calls and how many puts are open at each expiration date, and then what the actual ratio is between them. And you can see the yellow line is the ratio, and then the blue and the red bars show you the open call interest and the open put interest on each expiration date for options. And you can see there are more calls almost on every single expiration date than puts. They're actually, way out in 2024, there are more open put interest. But you can see there's just this massive amount of calls in January 2023, and you can see both the weeklies. There was a lot, obviously, last week, and a lot of that actually I think came right on Friday. But if you look at over next week, there's almost double the amount of calls to puts. And then if you look at the actual monthly options for August, you can see there's quite a bit more calls than puts open. And so I think a lot of people are yeah, this is my speculation, is that a lot of folks are starting to jump on the bandwagon and, buy those call options. And now if I go down here and I look at just the amount that were just traded on Friday, I believe this data is showing what was just traded on Friday. You can see the amount of calls traded versus puts, very recently was massively skewed towards calls, right? You had so many more calls traded here. You can see for the next 3 weeks, there was quite a bit, that were opened up on Friday, or not opened up. And sorry, I didn't update the chart title. That's my bad. Calls and puts traded, not open interest here. But you can see this sort of shows that, very, very recently people are trading the calls a lot more, and so that I think is a bullish indicator. And then another thing that I've looked at in the past, and I looked at here, is if you look at all the calls that are outstanding, some of those calls are going to end in the money, some are going to end out of the money. For the ones that end in the money, the seller of that call is going to have the obligation to deliver 100 shares to the person who holds the call. If they are still holding it at expiration, they exercise it. One of the things that I look at in situations like this, because it's super relevant, is how many shares are going to move hands given all of the call options that are open, right? And so if there are a lot of call options and the stock goes way high, has a very high stock price, then a lot of those calls are going to be in the money at expiration, and this gives you some indication of how many shares could potentially change hands, how many it could change hands at expiration date if those call options are in the money and therefore get exercised. And you can look at this in two ways. One of the ways is just, okay, that's how many shares would need to trade hands, and how many shares might potentially need to be bought in order for those call options to be, for those, when they are, for all those shares to actually trade hands that need to. But then another, and that's what this chart here is showing. This chart here, let me see if I can zoom in just a tad bit more. You can see I did lines. I did different scenarios for different stock prices, right? Stock prices all the way ranging from 8, which is roughly where it's at now, all the way up to 20, just as an indication of where this looks, what this looks like, and then how many shares would need to change hands, right? And so this gives you some visual indication of what we could see if there was, if the stock price goes up, what indication or what we could see in terms of purchasing of the stock in order for folks to actually make good on their call options that they've sold. And this is sort of alluding to the gamma squeeze, right? And that gamma squeeze, if you've read anything about this is a large part of what folks think happened with GameStop early on in January of 2021. And that is that as the stock price went up, more call options became in the money, and therefore the folks who had sold those call options, bought more shares of the stock because they expected that they were going to have to actually deliver the shares at the expiration date of those call options, rather than those options expiring worthless as they would if the stock price had not gone up. And then because they had to buy those shares to make sure that they were safe to be able to deliver the shares for the call option, that buying pushes the stock price up, which causes more folks who have sold call options to then do the same calculus and buy more shares, right? And so this was, if you look at that, if you've read articles about this, and you can look it up yourself if you want to go do more research to understand it better, this is the gamma squeeze, right? Where it sort of gets squeezed because as it goes up, more folks who sold call options have to buy more shares in order to be confident that they're going to be able to deliver those shares, at a known price. And that sort of creates a cycle where it just goes up. And if you're not familiar, right, it's called a gamma squeeze because gamma is it's a term they use, term folks use when they're talking about options to really talk about, it's sort of the second derivative of the price of the option versus the price of the stock. And, to make that maybe more concrete for you, as the stock price goes up, right, the price of the option is going to go up. But as that happens, there's another, that's like the first derivative, right? That's the delta. And on top of that, as the stock price goes up, the amount that the option goes up for every increase in a dollar in the stock price, that actually increases, meaning that it's going to, the value of the contract of the call option is going to go up even faster as the stock price goes up. If you're interested in this, want to understand more, look up the options Greeks is what they'll be called, and read up on delta and gamma, and hopefully that gives you a little more indication. But this is what really, again, went into sort of the gamma squeeze. And if you look down here, a lot of folks who are selling call options, by volume, are professionals here, and they are already likely doing something called delta hedging, meaning they are probably not just selling the call option and then waiting to see if the option goes in the money at the expiration date, and if it's in the money, buying 100 shares in order to deliver for that contract. What they are more likely doing is constantly monitoring and saying, sort of, how likely is it that this call option is going to end up in the money? Let me sort of buy some shares so that I have somewhat of a hedge, right? And so the intuition here would be, if I've sold a call option on a stock and it's still 20% above what the current stock price is, I might feel there's a small chance that stock is going to actually go past that, that price is going to rise by 20% or more by the time the expiration date of my call option. And so maybe I'll buy, like 10 shares or 20 shares in order to make sure that I have at least some a sum there, so that if the stock goes up, I at least have some of the shares already. I don't have to buy them all at whatever the higher price would be in the future. And then as the stock price goes up, if it does, and maybe it goes up 10%, but it's still not quite at the full amount of the strike price of the contract, maybe I'll buy 10 more shares so that I now have, let's say, 30 shares, and I'm hedged a little bit, right? And this is how presumably market makers are doing things. And so if you assume that they're already hedged for the contracts that they sold, we can then look at and say, well, if the stock price goes up even more, how much would they buy in order to hedge those contracts? And so this is a super interesting thing that we can look at, and this is another quantity that I've looked at here, which is at various stock prices, how many more shares would folks who've sold call options have to purchase if this is how they are doing their delta hedging strategy, in order to be hedged on those to stay sort of delta neutral, is what we would call it. And I think this is a very crude model. I don't think this is super accurate, but I think it's close enough to give some indication of how many shares would folks be buying. And so if you really just look at this and you say, hey, if the stock price goes up to 10, this is this red line, you can see sort of for all of these options and all these dates, they're going to have to purchase all of these shares in order to stay hedged. And maybe a better way to look at this would be sums here. I probably should have done that already. So if I actually sum this up, I can do this real quick. Sum of AA85 to AA96. Let me make a chart out of this. Give me one moment. This will not take long. And this should be good. Well, we can just look at the numbers here. We don't actually have to look at that. So these are how many shares the folks would be buying at various, sort of with the current open interest in the stock. Whoops, I wanted to do this just to give us some separation there. There we go. So this 8 number is not relevant right at the moment, so we can delete that because it's currently at 8. But at $10, if it rises from 8 to 10, I think, in order to be similarly hedged, folks would have to purchase 6.5 million shares. You can see this goes up and up all the way up to, if the stock price is at 20, folks would have to actually buy 11.8 million shares. And so some of that is already included, right? These are not, these don't add up. These are, this would be cumulative, so that, it wouldn't be 6.5 plus 7.6 plus, 8.9 million shares. It would just be the 8.9 million shares that would need to be purchased and held as a hedge if the stock price rose up to 15. But the point here is there's a lot of shares that might need to be bought if the stock price goes up, and this is going to create a feedback loop, or a cycle, right, where stock price goes up, more shares need to be bought in order to hedge the call options, which causes stock price to go up even further, and therefore you kind of get this cycle. And so this is something that we could see. So I went through quite a lot today. Let's see. I don't have anybody ask any questions on the chat at the moment. So if you're watching this, please ask questions, add comments, down below, because if it's not obvious, like, I'm super interested in this, and I'm very, very excited about the current situation, and I think there's a lot of potential here. And so I'm going to continue monitoring the situation, and we'll see what happens. I think there's a couple of potential catalysts that could really, really cause a sort of a large jump in the stock, that really could kick things off and set some of these other things that I see as sort of a powder keg, sort of light the fire. One of them, the biggest one, is going to be if there's an announcement on BBBY Baby and what they intend to do there. And I think there's some anticipation this could happen fairly soon, based on some comments that were made in the earnings call. The most recent earnings releasing, that was for what would be Q2 numbers, maybe Q1. I can't remember, because their quarters are always off since they're a retailer. And even for that matter, even if there's just an announcement on debt refinancing or something, so that they make it clear that they're going to be able to make their payments, their obligation for the 2024 notes, and that the company is going to be able to continue past that. I think that would destroy the short-term bearish thesis of bankruptcy in the short term. So that would be another potential announcement. And if there was another large buy-in from somebody, that would also be super interesting. It could really get things kicked off if that sort of further constricted what we viewed as the public float, and sort of push that ratio between short interest and public float even skewed it even further past 100%. That could also kind of just be yet another catalyst that gets a lot of folks to sort of see this as an opportunistic situation in order to buy into the stock. So those are some things that I am looking at and potentially anticipating in the near future, and that would be again just something I'm watching with a lot of excitement. So all right, I am gonna